Nobody knows really, but if we look at our results that we announced today, basically you see that the underlying development of our business is continuing. So we've seen 1.1 million new customers coming in, 1 million new primary customers coming in for the year. For the quarter, even 300,000 extra. In net lending continues to grow. Just for the quarter, we had 7.7 billion of new savings coming in. That resulted into a result of 1.273 billion net result for the quarter, which is 25% up from last year's fourth quarter. So if you look at some of the issues playing in the industry, clearly we have to take those very seriously if it comes to the ones that we had to deal with, which is our processes in order to prevent financial economic crime. But if you look at the underlying developments, both strategically, commercially, as well as financially, you see that it's been a very strong year.
Ralph, what are the biggest barriers to growth for your bank specifically, but the broader industry in 2019 in Europe as well? We've seen some pretty damning data over the last few days coming out of Southern Europe, in fact, coming out of the whole of Europe, let's just say that as well. But what are the biggest barriers to growth for your bank in 2019?
Well, clearly, if you look at the total Eurozone development from an economic perspective, that is something that we need as a tailwind as well. Now, if the Eurozone economy isn't growing as fast, clearly it may hamper some of our growth. Having said that, as you know, we have an approach into banking which is fully digital. And we take market share every year, and we have shown that again last year. So we're generally growing fast in the market, so it may have some influence on growth. What we're more looking at, though, is our wholesale banking growth. Where basically, if you look at where we are in the cycle, we're a little bit more selective as to what we want to do. With Basel IV coming, we're also looking at repricing, so that may slow down some of that growth. But overall, given the fact that we have an approach to the market that is different from many other banks, we're gaining market share.
Ralph, let me ask you about your modelling around interest rates and that net interest income. I noticed it went up about 1.5% on year, 1.7% quarter by quarter in the fourth quarter. What are you expecting this year if we happen to see Mario Draghi or his successor move on that negative deposit rate? Do you think we'll see a significant difference to that net interest income?
Well, honestly, I think that with the discussion that's going on in the Eurozone and some of the budget discussions that we have seen on Italy, I think that the ECB will take a very cautious approach as to whether they want to go look at interest rate increases there. So they will play it by ear. I think for the next 6 months we won't see too much from the ECB. Thereafter, they may consider it, but they will be very cautious.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.